2023 is getting long in the tooth. Let's make some money before everybody goes home for Christmas. This week, we'll look for opportunities during the RBA, the BOC, and NFP events. Anytime central banks release their interest rate decisions, volatility is guaranteed. Over the next 5 days, the Australian dollar, Canadian dollar, and US equities will be in action. Honestly, trading isn't all that hard. You find the key events, you identify the impacted markets, and you trade the action. All right, let's take a look at 3 key events on our target markets for week 49, 2023. Business picks up Tuesday with the Reserve Bank of Australia's interest rate decision. Now, currently, rates reside at 4.35%. Are they to tick higher or hold firm on Tuesday? Well, the RBA has held rates at 4.35% for the past several months. Don't be surprised if they stay at 4.35%, even though the pressure to bring inflation under control is palpable. Our key market, the Aussie Kiwi. Okay, with the RBA announcements, this Aussie Kiwi really has an opportunity to move and maybe test either one side or the other of 2023's range. As you can see, it's been a whipsaw trading year for this pair. This is a monthly chart. Right up there's your high at 110.87 and your low is right down here at 105.59. Take a look at October's low though, 106.17. If in fact we see this pair drop just a little bit to open December, potentially we could get a nice bid from right there, right above October's low and put our stop loss beneath the yearly range and play sort of a reversion strategy here on this Aussie Kiwi. So I'm definitely looking for this pair potentially to drop down into a zone where we can get involved, and that would be right above October's low, somewhere right around 106.25, 106.50, and look to really price this pair right back into the center of the value area, which would be a great reversion trade and a nice way to trade that RBA interest rate decision. For the second time in 36 hours, the world's central bankers will take center stage. This time, the Bank of Canada is set to render its monetary policy verdict. The market consensus believes the BOC will hold rates static at 5%. But will it? Inflation is persistent in Canada. Another 25 basis point rate hike may be in the offing. On Wednesday, we'll focus on the USDCAD currency pair. Again, the BOC interest rate decision, we're going to be looking at this dollar CAD. Now, we've had an active crude oil market, and now with the BOC, we may get a nice directional move here out of this pair. 135 even has been just a huge number the entire year. We'll take a look at what we have now. We have a nice spike low that developed back in July, and we have a nice spike high, sort of a head fake above this double top that developed in November, and then we got the big reversal. We pointed out that trade on some weekly analysis a few weeks back. Go back, check that out. And right now, we are doing business right around that 38% retracement of what is the yearly range. So I'm still a little bit interested in that level. I think 135.90, very simple. I'm going to be bullish above that level, and I'm going to be bearish below that level. I think this area could set up to be a real nice support zone, potentially an intermediate swing low, but I have to see price get reestablished above 135.90, perhaps a daily close up there, and then look to go long the market. However, if that does give way, if that area does give way, then I'm going to be looking for a major break, potentially down to 135 flat again, and then maybe looking to buy back in somewhere down around 134.25 after that big directional move. So very simple. I'm bullish above 135.90. I'm bearish below 135.90. Why? Because that's the 38% retracement of this year's range. So pretty good pair to be trading there. The dollar CAD on Wednesday, the BOC interest rate decision. It's quiz time, brought to you by Switch Markets and HowToTrade.com. The rules are easy. Answer the following question correctly, subscribe to our channel, and you can win free access to the HTT trading room. Are you ready? Okay, here we go. What monthly rate of return can you expect to make as an active trader? Is it A, less than 2%, B, between 2% and 10%, C, more than 10%, or D, it depends on your style, capital resources, and goals? Leave your answer below, and good luck. Friday is this week's headline event. U.S. non-farm payrolls. All year long, NFP has missed the mark. This inconsistency has led to huge revisions on a near monthly basis. What will we get Friday? Well, that's anyone's guess. Last month's number was a shocking 150,000, and this figure is sure to be revised. It may be a better idea to watch the unemployment rate, which came in about 3.9%, and it's on the cusp of 4%, a huge benchmark for the Fed. Do we finally see unemployment tick above this critical level? It's very possible. Our key market for Friday is the S&P 500. All right, Friday is really the headline event of the month for the United States markets. We're looking at US NFP, our jobs reports, and our target markets, US 500, US large caps. There's two numbers that we need to be aware of for the S&P 500 or the US 500 CFD as we roll into Q4. The first one is our yearly high thus far is 45.97, and then also our all-time highs up there at 48.20. Now, in my view, an incredibly bullish month, really a bullish market most of the year, and now you've got that big rally. So what do we want to do? Well, we want to buy pullbacks. The problem is we can't really do it on a monthly chart, so we're going to have to dial down our periodicities and go to a weekly and take a look at exactly what we have. You're going to want to wait for this. Remember, this is a Friday number, so you're going to have to wait for this weekly high to come in, and then you're going to draw your Fibonacci's right from that spike low to wherever your intra-week high would be. So as of right now, let's just draw it right from that yearly high. Let's say we get a pullback maybe somewhere around that 38% level. 44.10, 44 flat is exactly where I would be looking to get long. So right now, definitely have a bullish bias toward U.S. stocks, S&P 500 as well. We're looking at really taking out that yearly high during December's trade, and then also making a run at that all-time high by the end of the year. And if we believe that's going to happen, then potentially we want to buy a pullback. NFP could give us that pullback. We just work our Fibonacci's accordingly and get long with good trade location. Week 49 is one of the final big trading weeks of the year. We have two central banks in action, as well as US NFP. It's time to be aggressive as we roll toward the holiday season doldrums. Plan your trades and trade your plan. Let's stock up on some green pips before the Christmas break. As always, be sure to subscribe to our channel. If you want to get involved in the markets, check out a free trial at How to Trade. Are you ready to trade right now? Click the link below and check out the robust service suite offered at switchmarkets.com. All right, that's it from here. Trade the action well, and we'll see you in the markets.